All right, well, let's break some of this down as we're seeing those shares of gaming companies Activision, Blizzard and Take-Two Interactive moving after reporting earnings today. CFRA senior equity analyst John Freeman joins us now to get into all the numbers. So, John, let's first of all start with Take-Two, what we're seeing here. What concerns you most out of this earnings data?
Sure. It was the guidance. This is the Christmas season they're guiding about. And, a $200 million difference is a lot. So I want to know, I'd like to know on the call, what exactly is, getting them so pessimistic. I can kind of understand that the macroeconomic situation is pessimistic. We have inflation, we have all this stuff. But I mean, that guidance was pretty draconian. And I would think that there would be more than just, macro is terrible. Here's, I don't know, we're just going to try to do this. That's a guidance, because I think there might be something more specific going on. At least I would like to think so, because otherwise, that seems just a little bit too draconian for just a normal sort of situation, even given the macroeconomic situation that we have now, right?
Yeah, John, it certainly seems like that, at least when you compare what we're getting from Take-Two to what we just heard from Activision Blizzard just a few moments ago. But drilling down into Take-Two, the reaction that we're seeing on the street with shares off pretty significantly right now. I know you want to learn more on the call, but do you think that might be a bit of an overreaction to the guidance that we're getting?
I don't know if it's an overreaction to the guidance. The guidance might be overly conservative, meaning the guidance might be a sandbag. That is, they know they're going to get hit anyway, so they might as well, I'll take it down a little bit, maybe lower it a little bit more so that they know that they can hit it. In times like these, when everything is kind of going bad, there is, I think, a smart tendency, if you're in terms of investor relations and that kind of thing, to, lower the guidance. If you're going to lower it, right, lower it a lot and make sure that you hit it. Right? Because, that's kind of what I see. The stock's down, high single digits, low teens, that kind of makes sense given the degree of guidance lowering.
And you mentioned, obviously, both companies dealing with macroeconomic headwinds, but you have a hold rating on Activision, you have a buy rating on Take-Two. What, if anything, would make you change that based on what you might hear on the earnings call?
So for Activision, it's all about the acquisition, right? And at this point, I'm not sure it's going through. Right, there's a lot of regulatory scrutiny on this. I was smelling that before. It's kind of why, I did downgrade to hold, because, but I mean, look at the price differential. It's a $95 acquisition, right, offer, and the stock is trading at 72. That's the greatest arbitrage spread I've seen ever. Right? You want to see a young Eric Mindich get out there and make some money. That is the biggest spread I've ever seen. That doesn't make any sense. That kind of tells you that the regulatory scrutiny is probably means it's going to be blocked, or it's going to be so prohibitive that Microsoft just goes, hey, we have a $3 billion out. Here's $3 billion, Activision, thanks a lot. They've got $50 billion plus net cash on the balance sheet. They don't have the $3 billion is not that big a deal to them. It might be a nice little going away present for Activision, but obviously not $95 a share.
Yet Activision still saying that they still see Microsoft closing the deal by the end of June 2023. John, let's talk about some of the numbers that we're getting from Call of Duty Modern Warfare, the fastest selling title in franchise history, crossing $1 billion in sell-through in just 10 days. How does this set us up? Obviously very well for the holiday season, but further out into 2023.
Well, I think that's the reason you want to own Activision. It's not just so the Call of Duty franchise. It's not just about the game itself, which is an amazing game. People love it, and so forth. It's about the interaction and the play among users, and the sense of camaraderie. The fact that it almost has like a strong social network sort of appeal to it, so people come back. That's powerful, right? That's what Microsoft is buying, right? The other parts of Activision, right, particularly with the internal management and the issues, it was a year ago with the sexual harassment lawsuit, which is still outstanding, right? That gives you pause, as a balance. And so, I work all the way through that and I come out to hold. But certainly Modern Warfare is I think it's a game-changing game, in that, given that strong sort of sense of play togetherness and that sort of social media aspect, the social aspect to pull everybody in. That's a franchise you can make money on for another decade at least.
All right, Activision barely positive here in after hours, up just around 0.4%. Competitor Take-Two, on the other hand, sinking in after hours trading, off just around 14% right now. John Freeman, always great to have you. Thanks so much for joining us.
Well, thank you so much. Appreciate it.